Hey everybody, how are you? Hope you're doing well. So, do me a favor before we get started. I need for you to hit this like button if you're not a subscriber. If you hit the subscribe button and notification bell next to it so that you will not miss the episode. So, today we're going to talk about the housing market and what is going on in the housing market. So, mortgage rates are falling. They're noticing that. So, the rate was 8% back in October, which was not too long ago. And now the current rate is guess what? Bing, 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 bing. A whole 7.4. So it's still high, but it's falling. So it's in the media from 8% down to 7.4%. So, the feds, they have stopped hiking their interest rates. So, what they expect to happen if the rates continue to fall, they expect that the price of the home will go up. So, either way it goes, you're going to be paying, if you see what I'm saying. So the rate may be lower, but then the price of the house will be higher. So that's what they're expecting. If the rates continue to fall, they expect the price of the house to increase. So for everybody sitting on the sidelines, waiting until the rates fall, it's better just go ahead and buy the house. I mean, if you are an investor and if your goal is to accumulate property, it's better to just keep accumulating property, but make sure that it is affordable at the current price. Make sure it's affordable. So they say you could refinance later, but in some cases you will be able to refinance. In other cases, you may not be able to refinance. So take that into account and make sure that whatever you're getting, that it's affordable right now. As if when the time comes to refinance, say that the answer is no. So make sure that it is affordable now. Now, if you are a first-time home buyer, then that's a different story. If you're a first-time home buyer, then it's perfectly fine for you to sit on the sidelines if that's what you choose to do. So the rates are falling, still high. We will see what happens as we go into 2024. If there is a recession, there are talks of a recession. If there is a recession, then in that event, then the price of the homes will likely decline. So we will see what will happen. As of yet, mortgage rates are down from 8% to 7.4%. So that's an improvement, but it's still high. And they're talking as if the rates will not go down to 3%. So some people are used to 3%. People who bought property a long, long, long time ago, they are used to the 2% and the 3%. Like we've seen the 3% here recently, about 2 years ago, it was at 3%. So they're saying that the rates are likely not to go down to 3%. But if they go down, they're figuring maybe around 5%, something like that. So at that point, if it were to go down to 5%, you know what that means? That means that everybody on the sidelines waiting for the rates to go down, when it hits that 5%, that means it's going to jump, everybody's going to jump in. And you know what that means for you? That means more competition. So right now, there's absolutely no competition. Rates are too high. People on the sidelines. So if you are a real estate investor accumulating property, then just go ahead and move forward and make sure that it's affordable for you. Again, if you're a first-time home buyer, that's a completely different story, and it's perfectly fine to be on the sidelines. Now, you don't want to just be stagnant doing nothing. So you still could be making moves as a first-time home buyer. And what are those moves? Those moves are going to NACA, going through that whole NACA procedure so that you can get low interest rates, getting your realtor, going to look at property. So you're not standing still just because the rates are still high. You're still moving. And then when you're ready to push that button, then you push the button. All right. So that's what the interest rates are doing, from 8% to 7.4% as of yet. We will see what will happen. And so, as you know, this is a finance channel. We talk about money, and we also talk about love, because balance is important, right? We are about being well-rounded. So when it comes to becoming work optional, are you familiar with that? So work optional is you have accumulated so many assets that you don't have to work. You're working maybe because you're bored, or you want something to do, or you have enough money to support yourself, and now you are looking more at impacting and improving the lives of other people. So that is work optional. So there's this whole community. There's this whole community of people, and the goal is to become work optional. So in order to become work optional, people are using different strategies. But one main strategy that is very important is to accumulate properties. When you have enough properties, then eventually you are work optional. You no longer have to work. You're not there working because you have to work to have to pay your bills. You're working because you want to work. And you may even be enjoying your life. So, accumulating properties, that's how you become work optional. Of course, there are other ways, and the other ways are creating your own business, things like that. But property is a way that you're not reinventing the wheel, because all the people before you that have become work optional, they have done it through real estate. So you're not reinventing the wheel. You know that path works. So, but how do you get the money to even buy property first place? So that's a big roadblock, right? How do you get the money? So you get the money to buy property by creating your businesses, figuring out which business is going to generate income now. See, property is for money for later, but you need money now, right? So where do you get money now? And that is creating a business or buying a business and figuring out which business is going to create money now. Which one will create money the soonest? Because we have this now money, we have this later money, and then we have this money down the road, like 20 years. So we have the different levels of when is it coming. So creating a business, that's where you get the money to buy property. Also, hard money lenders, DSCR loans. Where do you not go? You don't go to the bank. The bank is where they tell you no. And that's where most people think about going. Think about going to the bank. So the bank is where they're going to tell you no. And especially if you're African American. All right. We like to pretend like there's no racism, no discrimination out here. But there's a lot of racism and discrimination out here. As far as the wealth gap goes, you know the history, right? So we're not going to pretend that racism is not here. So you know the history of how this wealth gap was created, right? So there are damages from what happened, right? And we're still living with those damages. There's also an income gap, whether people want to admit it or not. There's an income gap. So what happens is, It doesn't matter how much education you have, how well educated you have, how many degrees you have, blah, blah, blah. When it comes down to hiring you, they won't hire you. Okay? Whether you want to admit it or not, there's something out here called employment discrimination. So it's harder for African Americans to get a job than other races. All right? So this is real. This is a very real thing. It's a real phenomenon, and it's called employment discrimination. Okay? So if they do hire you, then they won't promote you. Okay? So that does contribute to the wealth gap, income gap. Okay? That's a real thing. Okay? So just want you to be aware of that. Also, lower access to loans. That's a real phenomenon. Okay? It's easier for some people to get loans than other people. That's a real phenomenon. Okay? So I just want you to realize that and acknowledge that and recognize that. All right? Discrimination is still out here and it's still real. All right? But what we're going to do on this channel is we're not going to let that hinder at all. Okay? So we know what to do, right? So we're investing in the stock market, you're buying property, and you are creating your business. Now, it would be a good idea to work together, but sometimes we can't always work together. So what we're going to do is we're going to keep pressing and we're going to keep working no matter how it looks. We're going to keep working. We're going to show up every day and we're going to keep working. All right. So that's what we're going to do. So I need for you to do me a favor. I need for you to hit this like button. If you're not a subscriber, I need for you to hit the subscribe button and notification bell next to it so that you will not miss the episode. Also, if you are not in the stock market, there is a statistic out here that says 55% of the population is in the stock market. You know what that means? That means that there's a huge amount of people that are not in the stock market. And if you are one of them and you're watching me, check out the link below. I have a Black Friday sale and I'm going to show you how to get in the stock market and how to invest in the stock market. Very important for building wealth. All right. So check that link below. All right. So do me a favor before you leave. I need for you to hit this like button. If you are not a subscriber, I need for you to hit the subscribe button and notification bell next to it so that you will not miss the episode. Also, leave a comment and let me know your thoughts. All right. Also, if you know anyone who is interested in building wealth or improving their finances, share this channel with them. All right. So thank you for watching. Before you leave, hit that like button. All right. Have a good rest of your day. Bye for now.